Hey guys, hope everyone's doing really well today or tonight. I want to make a quick video on exactly the three mistakes you should avoid when it comes to investing. Now, obviously, there's lots of different ways you can stuff up investing or you can lose money investing, but these are the three that I found to be the biggest or most impactful, especially for me personally. I've been investing for about it's coming on 7 or 8 years now, so quite a long time. I've learnt a lot. I've invested in a lot of different assets. I've lost money occasionally. I've also made a lot of money as well. So I thought I'd make this video as kind of just a general, three tips to three investing mistakes to avoid, and yeah, I guess how you could approach investing, a better way than what I've done previously. So let's get into it. So one of the first ones is not being proactive in learning or educating yourself. Now, this is less spoken about, but it's the reason for a lot of problems with investing. So investing is like a muscle; it gets easier the longer you train and invest into growing your mindset. So every single day I'm reading books, I'm watching content, I'm doing whatever I possibly can to learn more about investing, specifically crypto, real estate, the stock market, but also alternative assets as well. Now, whether it be a book, even on personal development, and really kind of developing that growth mindset, even something like that could also be thrown into this bucket as well, because the reality is investing it's a long-term game. It requires a lot of sacrifice. It isn't easy for a lot of people, and it also can be complicated at times, especially when it comes to tax considerations or the best way to structure different deals or different assets, or even touching on trust and whatnot when you're looking to protect those assets. So it becomes a really big thing, right? So, um, obviously, you're not going to know everything starting out, but speaking to the right people, taking initiative and learning and reading, and yeah, just be willing to forward your education and invest into growing yourself is super important. Um, and yeah, like I mentioned, there's a whole bunch of resources online, whether it's books, whether it's social media, whether it's people you speak to, in the investing world, whether it's a mortgage broker, whether it's a financial advisor, accountant, whoever it might be. They all have specific niches that they're experts in, and that they really they've got down pat. So if you're able to pick their brain and really understand kind of nuances from their end, that could be invaluable, because a lot of people just don't get access to that kind of knowledge. Even through some books, you're just not going to get that. It's through real world application and experience. So now, when you start educating yourself into investing, and kind of the risks behind it, what's good, what's not, what to look out for, etc., you're going to be more comfortable, and you're going to, like, obviously there's risks involved in anything really, but in particular investing. You're going to be able to make decisions in your best interest once you've understood the risks, and just being comfortable with that. Right. The reality is that when done right, a lot of things can be done with not much risk at all. Whereas some other things like cryptocurrency or various alternative assets might be a little bit more up and down, which obviously that might be fine for some people. If they're able to take the bottom, like the lows, to get those highs, then that might work well for them. Whereas other people just want a consistent, slow growth up over time. Now, being proactive in educating yourself as well, I think you're gonna be able to really squeeze out the most from your investments. Um, and this is talking about kind of like niching down and really kind of becoming an expert in a certain area. When you start learning about investing initially, you're going to dabble in lots of different things, right? And you might even try, say, put $100 into the stock market, maybe $100 into crypto, and you're going to see what is interesting to you, or what you enjoy, or what you don't enjoy. Now, when you find something that is working well for you, it might be making money, or hopefully it is. You're enjoying it. You understand it. You're wanting to learn more. That's when you really start niching down. So For example, I found that recently with property, where I didn't really know much about property before, but over the last couple of years, I've really started to invest in books and education around property, just because I'm really trying to understand the really niche nuances of property investing. So I've said here property equity, but it could also be specific you know tax implications for owning businesses in a company or versus a trust, or yeah, there's just lots of different ways and on how how you can get involved in investing and learn about investing. It can get really complicated and niche, so you don't have to be an expert, but if you find it personally fun like I do, I think you're in a really good spot. And if you don't, then find something around investing that you do enjoy and that you do want to learn more about. Now, here's one that not even myself, I hadn't even done for a long, long time while I was investing. This has only come about in the last year or so, but having a clear investment strategy for when you're investing. So, like I mentioned here, you can kind of get away with this when you're starting off and when you're learning, when you're dabbling in new things. You might stuff up in lots of different areas, but it's okay because you're learning, and it's likely also a small amount that you might be losing. So that's totally fine. But when you start, when you continue to invest over time and you're getting those compounding returns and you might be earning more as well, this is when it's really, really important to kind of get that strategy put together. Now, you can either create this through, researching yourself, or you can speak to a financial advisor. But just being able to really understand the nuances behind, where you invest, right? So for example, if you're purchasing property and you're just purchasing lots and lots of property, what you might not consider is, is property liquid? Can I easily sell it to fund retirement? Well, the answer is no. Is property extremely like a very does it have a lot of cash flow? Maybe it might, but it also might not if you're investing in capital cities. What's the asset protection look like? Can you potentially put it into a trust? Can it be a company? Can it be, am I able to, you know, easily access the growth of the property through something like equity? Yes, you potentially could, whereas you might not be able to as easily do that with something like shares or the stock market. So it just depends. There's so much to it, but whatever your goal is with investing, or wherever you want to end up in the next, say, 10, 20, 30 years, you might want to have a think about that if you don't already have something considered. Now, there are a lot of different ways you can invest based on your goals. Like I mentioned, some people do short-term flips, and I've heard stories of people within 2 or 3 months making near $100,000 on property, because they bought in a good location or a up and coming location that's really in the spotlight. Maybe they've done some repairs. Maybe they've potentially done a deal with the landlord where the landlord's also investing in that venture, so there's no capital gains tax, etc. There's lots of different ways you can approach it. Now, for most people, I'd say the long term works really well. It's the most hassle free. You also get access to the most growth, generally speaking, and it's also going to be the lowest risk. Um, some people also want to be really highly diversified, so they really want to spread out their investments over lots of different asset groups or lots of different, geographically, even lots of different countries, right? And some people just want really low risk, for example, where they just invest in the S&P 500, or they might even put it in a term deposit and call that an investment. But it just depends. I guess there's no right or wrong, depending on your situation. There will be some that will make a lot more than others, but also some that could lose a lot more. So it just depends. Now, once you do have your investing strategy, including your timelines, what kind of assets you want to invest in, what risks you're willing to take, how much you're willing to put up, etc. I think having this clarified will mean that you're not as likely to make any emotional decisions. For example, panic selling because you haven't accounted for a job loss, or potentially something happened and um, a lot of your expenses increase. being able to account for these things just means that you're not touching your investments and just essentially making an emotional decision and really impacting that compounding growth over time. So as part of your strategy, you might have an emergency fund, or you might be contributing a set amount of money to, you know, expenses, or maybe the kids' education, or maybe university, whatever it is. But account for that in your plans to make sure that you don't impede on any investment gains or investment contributions that you're making. Now, me personally, I've planned for the next 5 years, right? With flexibility for future years because I don't know where exactly I'm going to be in the future. I might not even be in Australia. I might be overseas. I'm not sure what my job situation would look like. So who knows? So I don't know exactly where I'll be, but over the next 5 years, I'm able to kind of put steps in place that, if for whatever reason I want to live on a farm, or if I want to fly to the other side of the world and just live there for a while, there are things in place to make it easy to potentially sell assets, or there are ways that I can kind of use, for example, tax treaties to kind of offset any income, even though I'm not in Australia living here, but I'm generating income from here and I'm being able to work with that a little bit differently. So, just having a strategy in place to allow for flexibility, if you're someone who isn't sure where they're going to be, like myself, could be really important to do. Now, this is one that's a little bit, I guess, more controversial, and I've personally been impacted by this myself. But I think a mistake is not taking the boring approach to investing. Now, don't get me wrong, investing can be heaps of fun, especially if you're starting out. Now, there's a fine line between gambling and investing, but we'll just talk about investing for now. But you know, if you're looking to invest in meme coins, for example, that's probably a little bit more gambling, or NFTs, for example, or highly speculative assets. I'd say that's towards the gambling side. But if you're talking about index funds, property, if you're talking about potentially Bitcoin, these are more, I guess, reliable, for assets to grow wealth through. And look, they're not going to be as exciting because obviously it's not gambling. Your properties, for example, might be really boring, or you might be investing in really boring companies that aren't that exciting. Or the house might be just really old and not great to look at. But the reality is, I mean, a lot of these boring ways to invest, that's how people have made a lot of money. So, dollar costing into average, sorry, dollar cost averaging into index funds, or purchasing old homes with really good numbers behind them might be super boring, but that's in my opinion. After a few lessons, I've learned that that's a really good way to approach it. Now, once you've reached your goals, right, or you're quite comfortable where you're at, you can kind of look into those other investments. Maybe not gambling per se, but a little bit more speculative. Maybe alternative assets, Pokemon cards, maybe some smaller cryptocurrencies. Once you've got that base set, because at that point, you're quite comfortable. Your life won't look too much different. So it's more potentially, or even invest into businesses, right? Just a little bit more, have a higher risk profile for those investments. But once you've got your foundation set, I personally think, but it just depends on you. Now, those fun or hype investments like NFTs, like I mentioned earlier, should make up a very small amount of your portfolio. The reality is, there's no guarantee that they're going to make money. There's no guarantee that a lot of things will make money, but historically, you can kind of get an idea of what it could return you. And NFTs are just a little bit tricky, and lots of other similar alternative assets where they're very up and down. They can be easily rug pulled. You can easily lose money. There's lots of different ways you can lose on some of these hype and fun investments. So keep that in mind as well. Now, I'll end with this, right? That, in my opinion, investing is a game of doing the same old boring thing over and over for a long enough time, right? Now, um, you hear about these massive amounts of wealth being created, and generally speaking, it's not through um, short, quick flips. It's generally things that are reliable with proven growth that they've just kind of compounded over time, for a long enough time. Obviously, the longer you have something compounding, the higher the returns will be, exponentially higher. So, I think long term is the best way to do it, into just boring things that make sense. the numbers make sense, and potentially, once you've reached your goals, maybe start diversifying into some more fun or alternative assets. But for the most part, keep it fairly boring, I'd say. So hopefully you guys have found some value in this video. I enjoyed making it. But yeah, that's essentially it, right? Three key things that I think, or three key mistakes that I think a lot of people make when it comes to investing. If you can avoid those, I think you'll be pretty good when it comes to investing. So if you guys have any questions, make sure to let me know down below. But otherwise, I'll see you guys in the next one. Peace.